For more on China's trade prospects in 2021, let's bring in William Lee, He's chief economist at the Milken Institute, and we want to welcome you back to the show. William, we've talked recently about manufacturing, how it's basically on fire, some companies scrambling just to find workers. We just pointed out in that story that exports rose. What's the expectation in 2021? Talk to us a little bit about 2020, what we saw and what we can expect this year.
We saw a tremendous boost in China's exports because the world was so hungry for work-at-home electronics like laptops and for medical supplies. And we expect that to continue possibly to the first quarter. But as the vaccine starts to take hold and as the global economy starts to recover, that demand will likely slow down and China's surplus will likely not grow as quickly. And for me, one of the things that's most interesting was why it was that China's imports really didn't grow as quickly, because China's robust domestic demand should have brought in a lot of foreign goods. And that may be an indication that China's dual circulation strategy may be working, redirecting China's demand domestically.
Yeah, I want to ask you about vaccinations because they're really kind of slowly making their way into the public. So as you look into the horizon, I mean, I've heard some people say it's going to take quite a while. In fact, the Chicago mayor saying it's going to take forever to get people immunized. Talk to us about this slow pace. What is going to happen with the international market share of exports? How will that change once these vaccines actually get out there?
Well, the recovery in the Western economies, United States, Europe, and so on, has been held up in part because of the logistics of actually just managing the supply of these vaccines. The manufacturers have been fantastic in developing them, but distributing them and getting them into the arms of individuals has been a challenge. And what it means for China during this period is that China's experiencing this slow shift in manufacturing of low value added stuff to Southeast Asia. In fact, Southeast Asia now has become China's largest trading partner over and above the EU, what the EU used to be. So it's the second largest trading partner for China. So what you're going to see is the trade patterns shifting into a lot of intra-regional trade and trade volume growing because the intermediate inputs that are needed within China are now being manufactured in Southeast Asia like Vietnam and other countries. So that shift is something that China's going to have to learn to accommodate as well.
We talked a lot about outbound. Let's talk about inbound, domestic demand. What are we likely to see in terms of imports?
Well, everyone's guess is that China's recovery is well on the way, and the dual circulation strategy is focusing in on a lot of domestically produced items, so the import demand has been lessened. Of course, China still has a massive demand for importing coal and energy products. This is the coldest winter that China's ever had, so I think we've seen this imports of coal really skyrocket. Going forward, we think that the demand for foreign luxury goods will start to kick in, and I think you're going to start to see a shift in the composition of Chinese imports going toward the more luxury goods that are produced in the rest of the world.
Let's talk about another problem. There are real issues about containers and capacity. There's been a shortage of containers and some of this other equipment. How serious is this issue? What kind of problems does that present?
Well, when there's an unbalance of trade, where there's so much in the way of exports going from China, you can imagine you have to get the containers back to China to carry more stuff. But I think these are short-term logistical problems. The longer-term issues, the policy issues that everyone has to confront is sustaining the export growth as Chinese manufacturing starts to shift and dealing with China's internal employment issues as the low value added manufacturing moves out, these workers become unemployed, and retraining them to be able to participate in the higher value added activities that are going to be growing in China.
And of course, in just a few days, we'll see a new administration here in Washington. Things won't change overnight, but this Cold War approach that we saw from the Trump administration with this blistering trade war, that should give way to something else. So give me your view on how the most important bilateral relationship in the world is going to change in 2021.
Well, Mike, as you know, we've talked about how the two largest economies of the world have to get together and develop the 21st century trade framework. And I think the Biden administration is on the page of wanting to make sure that the deal that we cook up with China is going to be good for not just the bilateral relationship, but also good for the EU and the emerging markets and the rest of the world. And there it means a framework for intellectual property protection, market access, and ensuring that as industries specialize, the specialized industries have full access and have the same standards across the board that are available to all the partnerships.
Let me ask you one final question, and briefly, if you can. It's so interesting. I was in China a little over a year ago. All the talk was about 5G, AI, self-driving cars. And here you've heard the Trump administration talking about, keeping the coal mines going. And it seemed like China's vision was the future. The U.S. was trying to bring back some of the technologies of the past here in the U.S. Is that going to change?
Well, I think the rebalancing of where the high-tech industries and where the massive employment needs to be sustained is going to have to be reconsidered in both countries. Don't forget, China's coal is 51% of China's energy needs. So we both have countries where we have to consider both the low-value-added industries, sustaining employment there, and making sure that the people who are laid off are supported, and at the same time being able to push ahead with AI and the high-tech industries, of which China has been phenomenally good. And I think setting the standards for these industries is going to be the biggest challenge, so that China's standards will be able to plug in to those of the rest of the world.
Yeah, that is a challenge. William Li, always a pleasure talking to you. Thanks so much.
Thanks for having me on.